Hi, and welcome to the Stockscores Market Minutes for August 19th, 2019. This week's topic, when is the stock market correction over? Of course, I will do my regular weekly market analysis. We'll look at the trade of the week, and we'll do a market scan in search of opportunity. Now, I am out of the office this week, so you don't get the video of me talking. You just get my screen. But hey, that can't be a bad thing. All right, so let's get into this week's presentation. When is the stock market correction over? The stock market corrections create great buying opportunities, so knowing the signs that the market is making a bottom is pretty important to your long-term performance in the market. There are four phases to a market bottom. First, strong selling pressure with very high volume. Next, a break of the downward trend line, the formation of a rising bottom, and then finally, a break up from a rising bottom. Now, you can watch the daily or even the 60-minute chart in search of this pattern. Let's take a look at the chart of the S&P 500 going back a year. And we're going to focus on the correction that happened back in late 2018 when we had this very sharp parabolic sell-off, and notice the volume was very strong. So that was step one. In other words, there was panic selling, people running for the exit door without any rational assessment of value. We then had a break of the downward trend line right here, and we built a rising bottom right there, and then ultimately broke from the rising bottom right there. And that whole process took 5 to 7 days. So you had this parabolic move to the downside, broke the trend, built a rising bottom, broke up from a rising bottom, and then the market went into that very good upward trend that lasted 3 or 4 months. Very simple how we saw it. Now let's think about the market right now, and let's actually just go into my charts of the overall market. You can see that we've had some pretty strong selling pressure here, and we've bounced back, but we're still in this downward trend. So we still haven't broken the downward trend line. However, I wouldn't really say that we've incurred a market correction yet because we haven't broken this long-term upward trend line that we talked about last week. We're close. We're kind of right at the long-term weekly upward trend line, but we've managed to hold it 2 weeks in a row. And so I don't think we're really in that situation where we're going to have that panic selling yet. Now we could, next week we could break the upward trend line, but as long as we hold it, we're really just in a pullback within a longer term upward trend. And I think that therefore my outlook long term remains bullish, although short term I'm bearish because we've had that selling pressure the last 3 or 4 weeks. Until that upward trend line is broken, however, don't get too concerned about the long-term direction of the market. Now here's the daily chart of the Russell 2000, and you can see that we have had that selling pressure there as well, but we've held support. There's horizontal support. We've held that so far. So again, this is just a little bit of selling, normal course selling within a longer term upward trend where you get some people taking profits and worried about the future a little bit. All right, on to the Canadian markets. TSX is first up, and you can see similar to the S&P 500, we're in this downward trend line. We do have a little bit of a rising bottom here, and so if we were to break up through that downward trend line, the market will probably get back into the old trading range. But for now, I think with this volatility, you want to be cautious. Buy weakness, sell strength. Looking at the longer term chart, we're in a sideways trading range, and so this is really a neutral chart pattern until we can break through that resistance level. Don't get too optimistic. And if we break down through this support level, then you need to be more concerned about the future direction of stocks. On to the TSX Venture, which was starting to build that reversal pattern. You can see that we had the downward trend line. We broke it. We were building the rising bottom, but we never broke up from the rising bottom. And instead, we've broken down this week as some money came out of the cannabis sector, really pulled this market back. And so I would return to a bearish outlook on the TSX Venture. On to currencies. US dollar continues to knock on the door of long-term resistance. We had a good week this week for the US dollar, but it's stuck underneath that resistance level, and until it can break through, expect the US dollar to go sideways. Canadian dollar has been selling off the last 4 to 5 weeks. You can see we're in that little downward trend. Longer term, we broke this downward trend. We sort of broke up from a rising bottom there, but we're just going through this pattern of uncertainty, I would say. I think we're getting a little oversold. We'll probably see the Canadian dollar bounce back soon, but a fair bit of volatility there, so I don't really think there's a trade there, more a case of the Canadian dollar does seem to be bottoming, but it's going to take some time. On to interest rates, and of course the bond market has been red hot in the last little while, and you can see another strong week to the upside for bonds, which means interest rates have fallen. Very strong volume there. It's a flight to safety, investors looking for a safe place to hide with perhaps concern about a recession coming, set off by China-US trade issues. If that China-US trade issue gets solved, I think you'll see the bond market pull back fairly sharply, but there's no solution in sight yet, and therefore there is definitely that flight to safety into bonds. On to commodities, and of course, another flight to safety is gold. We've had a great rally in gold. As I've said in recent weeks, I think that it's a good market to hold, but I would not initiate positions here simply because we're already now well into the trend, having trended higher for over 3 months. And therefore, if you have gold stocks, continue to hold them, but watch for a break of the upward trend line as a sell signal. Oil is unable to break out of this pennant pattern, but it's also unable to break down. It's been stuck in the pointy end of the pennant, and if we can break to the upside, oil goes higher. If we break to the downside, we're probably going to hit the support level. For now, we're waffling around inside of that pattern as the world debates whether there is going to be a recession based on China-US trade. If we get negative headlines, it seems to hurt oil. If we get positive headlines, it seems to help, and therefore it's really a headline-driven market right now. And finally, the fear chart. You can see that we have broken the downward trend on fear. That means fear is rising. We've got the rising bottom building. If we can break up from this rising bottom, that would mean that the market was going into the next phase of the pullback and really going into correction territory. And this is a good hedge if the market does start to break down through support, does start to correct further. This will go up, and it's a good way to make money from that correction. So my ratings then bullish on the US stock market long term. It is holding that long term upward trend line, but bearish short term with lots of volatility. Canadian stocks neutral long term, bearish short term. Gold bullish on both time frames, oil neutral long term and bearish short term. There's a lot of volatility in stocks, but not much panic selling. Investors are really focused on the headlines about China-US trade, and the market really moves based on those headlines. Lots of volatility. Gold and bonds are a safe haven for investors, but I think chasing those markets higher here is a risky thing to do. It's only a hold, not a buy. Oil is holding long-term support, and fear is moderate, but still not in panic mode. All right, let's do a market scan on Stockscores in search of opportunity. I'm not too optimistic that we're going to find much this week because of the volatility in the market, but let's run the abnormal breaks US scan. This searches for stocks making statistically significant abnormal price gains with abnormal volume, and I then cycle through the charts looking for the kind of patterns I like to see. Typically what I want is a break from either low volatility or a break of a downward trend line. Here, for example, is a stock that has broken this little downward trend line, having made a sort of a triple bottom. Not much volume to accompany this, so I would give this stock a 6 out of 10. It's promising, but not really good enough for me. Continuing along, don't really like that one. Here's another biotech stock, came alive on Friday, and you can see that break higher from a rising bottom. The problem here is there's a fair bit of resistance in this price level. So when the stock gets up to $10, you're going to have selling pressure that limits its upside. So again, this to me is a 6 out of 10. It could work because of that abnormal activity is indicative of something going on, but it's not really got great potential. Here is a stock breaking its downward trend line with some decent volume, but not huge volume. It's going to run into resistance up in here. We've broken the downward trend line, built a little bit of a rising bottom. But again, look at that lack of volume supporting the break. And that often means that this will fizzle out. If it does work, it gets up into the $26 to $27 range, but I would give that a 6 out of 10 as well. Continuing on. This is a stock that's a great hold, but really its entry signal was back here on this breakout from this rectangle consolidation. This is now the reward for having bought back when the market broke out, and therefore it is simply a hold. And just continuing along, we got a couple more charts to look at, and then we'll move on to the trade of the week, the day trade of the week, and I don't really like any of those, so let's head back over here and look at the day trade of the week. Again, this is just really for educational purposes to demonstrate how my day trading strategy works. In this case, we're looking for action candles on the 2-minute time frame. We had one on MTDR on Friday, just right around 11:30. You can see the spike in volume. You can see the stock breaking up out of this pattern, It's trending higher, went sideways, nice consolidation, broke out. The entry price was in around that 1445 zone. For $100 of risk, it required a 990 share position, which is a $14,306 of capital, but with margin, you're using $4,769. The stock ultimately, at the end of the day, closed at a 5.7 RR, which means a $570 gain for the $100 of risk, and that represents an 11.9% return on a one-day hold. A nice trader on a relatively slow summer Friday. Well, that has been the Stockscores Market Minutes for August 19th, 2019. Hope that you've enjoyed it. If so, click on the like button, subscribe to the channel, leave a comment, and most importantly, trade well.